Well, howdy there, folks. You may or you may not have heard the news, but Cathie Wood is once again selling Palantir stock. We're going to speak about that in this video. I want to give my opinions and perspectives on Cathie Wood starting to dump Palantir shares, okay? So first off, let's talk about this Cathie Wood situation, right? She's dumped over 100,000 Palantir shares, which I'm sure there's a lot of you guys watching this video right now that are like, dang, man, I wish I held 100,000 shares of Palantir stock. That would be amazing, right? And so she dumped a bunch of shares. It's going to be for one excuse or another. Oh, it's to put it into this, it's put it into that. There's always an excuse with her, right? There's a reason that when I saw, she bought Palantir this most recent time, which was after it already started going up massively. There was a reason I wasn't that excited about it. I was like, whatever, cool, because I understand Cathie Wood. She is supposed to be this long-term investor, but many times she'll be in and out of these positions. And in 1 minute she's buying a stock 1 month, and the next minute she's selling the stock the next month. And it's like, wait a minute, I thought this was supposed to be like a long-term hold or something like that, right? And it's not that way, right? If I look at her portfolio now at this point in time, I hadn't really looked at her portfolio in depth in a while. This is the Stock Circle website, kind of keeps track of everything, right? Coinbase, she just finally got profitable on Coinbase, it looks like, right? And Coinbase has been super hot, and the reason Coinbase has been hot is only because Bitcoin's been obviously having a roaring year, right? Along with the NASDAQ. UiPath, she's still down massively on that. I was looking at Tesla. She must have gotten some bad praise, because I remember back in the day, Cathie Wood was buying Tesla when I was buying Tesla. And so I'm like, why is she only up 200%? Look at how much I'm up on Tesla, 989%. This means likely Cathie Wood was, throwing tons of money into Tesla stock, probably in the 300s, if not even higher than that, maybe all the way up to $400 a share, right? And then just buying at probably some poor prices, and maybe even loading up in the 200s. But yet, look at her positioning of the portfolio. It's all the way down to just over 6% position for Cathie Wood. Tesla used to always be 10% of the portfolio, and she used to use it as an excuse to sell Tesla anytime it went over 10%. Like, oh, I just want to keep it at 10%, which is strange because now Coinbase is technically over 10% of the portfolio. So little strange in regards to that, right? Right? I mean, she always has a reason that she dumps out these stocks, and seeing even her Tesla be only 6% of the portfolio, that just shows me she's got less conviction in Tesla. But I mean, you look at these shares, and it's like, where is she making money? I mean, look at her average prices. She's not making money in anything, pretty much. I mean, it's a disaster. I mean, slight gains on coin now. Tesla's the big winner, but that's not even that much of a winner, right? I mean, look at this. Shopify, 11%. This is bad. This is really, really bad. And so at the end of the day, I don't know what Cathie was up to. I don't know if she's moving more toward Bitcoin or what she's doing here, but I'm just here to tell you, I really could care less about whatever she does anymore nowadays. It's just, her performance it speaks for itself. If this was my portfolio, I would just quit stocks. Like, literally, I would just quit stocks. If this was my portfolio and this was all my positions, I'd quit. I'd be like, it's not even worth it anymore. Like, this is just ridiculous. Because this is a disaster. Let's just call it what it is, folks. So anyways, she's selling Palantir shares. Who knows? Maybe she'll sell more shares. Who knows even why she bought Palantir? Like, maybe it was only for the publicity. I have no clue. And honestly, I really don't care. So that's kind of my 2 cents on that whole Cathie Wood. Next thing, she's buying a stock. Next month, she's selling a stock, whatever. The game is the game, okay? Palantir Technologies, ticker symbol on this one, PLTR. Been a good performer over the past 5 years. Actually, it's been public for less than 5 years, but 80% returner. Now, Palantir gives me no tears. I love Palantir, okay? Here's the deal. They have very successful products in several different verticals, whether we're talking dealing with military, commercial customers, whether we're talking about dealing with, let's call it other government-related entities. I mean, they have the products to do it. They have Foundry, which is very popular. They have Gotham as well, and they have Apollo. And so if you know Palantir, you know those 3 products there. But then they got the new, hot one on the market, and that's AIP. Activate LLMs and other AI on your private network subject to full control, which is something I think is going to be very needed by a lot of companies over these coming years. I mean, a lot of companies, because when you think about AI and you think about everything that's going to be going on there, and you think about all the permissions that might be needed to access certain things, I mean, somebody in your organization, you might not want access to this other thing over here, while somebody else should get access to that. Even the AIs, you might want an AI to get access to one thing over here, but you don't want it to get access to this other thing, right? And so I think AIP could be huge in the future. Now, AIP, a lot of people are trying out this product, and it's making Palantir so much more relevant almost overnight. But they have these new AIP boot camps, and it's amazing because Palantir was always thought of, it's such a slow sales cycle. Oh my gosh, like it's going to take Palantir forever to sell to a customer. But now people are able to execute and use these AI boot camps in a matter of a couple days. They're able to start to see progress be made with this AIP and, understand the product and be like, I actually like this. Let me sign up for this, right? And then that opens up Palantir to obviously sell other products as well to these companies over time. So I've heard people equate AIP to kind of like a Trojan horse. It's kind of like a Trojan horse to ultimately sell maybe Foundry, right? So I think this is so understated for 2024 and beyond in terms of Palantir, in terms of these AI boot camps and just being able to have customers use it quickly and be able to get up and running in a matter of days. It's phenomenal, right? Obviously, the company's been scaling their revenues. Palantir, the company scales year after year. Big numbers are going to start to be pretty fun. And the reason being is if this company can continue to put up, let's call it like 20% type growth rates. And I know there are some people that believe this company's going to get back to 30% plus. I'm not as convinced. I think 20% is kind of going to be the number for the coming years. You got to keep in mind the numbers that Palantir is now at. They're now doing multi-billion dollars of revenue, right? So it's a whole different scale than this company was when they were growing and it was like a few $100 million of revenue, right? So as the numbers get bigger and bigger, as long as they can keep that growth rate consistent, the dollar amount is immense, and the amount of that dollar amount that's going to hit the bottom line is going to be incredible for this company, which is going to make it a cash flow machine, a profitability machine, right? Now, analysts out there, I don't know what they're looking at with Palantir. Maybe I'm missing it, or maybe they're missing it by a mile. They only have EPS growing for Palantir 18% in 24? 18%? Excuse me? This is going to be their second year of profitability, right? So when companies are at the infant stage of profitability and that flip happens, usually over the next several years, you see an immense earnings per share growth. The fact that analysts are only at 18%, I think analysts are massively off. So the company looks expensive, 58 times next year's numbers. I think they're so far off, it's not even funny. They're not even looking at this. And this matters substantially, folks. If we take a peek here at the operating income of Palantir, so if we go back to the September 2022 quarter, operating income was negative $62 million. Negative $62 million. They did a $100 million plus flip in the latest quarter to now $40 million of positive operating income. That matters substantially, folks. The earnings per share growth you're getting in this company on the bottom line is huge, but also this operating income, doing a flip like that, is massive. And I think this is way understated with the company. We know they're going to still bring in a ton, I mean a ton of treasury-related income for the company that's going to help the bottom line. But the operating income now doing this flip, and now it's starting to scale this. I mean, look at where we went from $62 million in the negative to then $17 million in the negative to $4 million in the plus to then $10 million in plus to now $40 million on plus operating income. Plus, treasury income is going to be coming in massively next year, which is going to help that bottom line. And the company's likely going to buy back a bunch of shares, which is going to help take a lot of shares off the market, which is going to help EPS. I mean, I don't know what analysts are looking at. We have a very big divergence of opinion. Analysts only have this company doing 29 cents of EPS next year. I'm like, I don't believe it. I don't believe it. I mean, I think 40 cents to 50 cents is much more realistic. Which, if you're talking about 40 cents to 50 cents, we're not paying 58 times forward P for this stock, folks, okay? So in regards to Palantir, I already own quite a bit of shares, and I own this in other portfolios as well, but I own 5,555 shares here. The company's far safer than when I first started investing, I can tell you that much. The fact that now they have an actual positive operating income, they got a positive bottom line now. I mean, the company's a far safer company than when I first started investing in the stock. So I would love to build up the position even bigger. I wouldn't mind getting this up to 7,000 shares or so in the public account and just owning more shares in general, folks, okay? Alrighty, next one up here, Mr. Short Hills Capital, Steve Weiss. The prime time for AI isn't happening yet. Is he going bullish now?
To grow as fast as Microsoft, they say, with earnings forecast to be up 15%. That's 3 times as quickly as Apple's 5% growth. The stock trades for just 20 times, a discount, they say, to both Microsoft and Apple's 30 times, and it's gained 50% this year, but the multiple hasn't.
Correct. And the cloud business has been defined as being disappointing, witnessing growth of 22%. That cloud business is going to accelerate in 2024. I think it's a very important exercise to think about the Mag 7 and tactically understand where you're actually going to see the outperformance in the upcoming year. I agree with this call when you look at Alphabet relative, certainly to Apple. And by the way, Apple has been the underperformer of the Mag 7 so far year to date. It's up 48%. All right, it's up 48%, but it's the underperformer of the Mag 7. If I look at the 2024, I see Apple underperforming once again. But I like the position that Alphabet is in, as long as you tell me, again, I go back to what I said before, the economy holds in. We don't see the deceleration, because if we see the deceleration, I have to worry about ad spending at that point. Otherwise, ad spending is going to be strong in a year where you have a presidential election and the Olympics. I like what they did in the acknowledgement, at least, of artificial intelligence not being where they wanted it to be relative to Microsoft. And
by the way, do you want to know a $3 little stock that's going to benefit huge from the Olympics this coming year in 2024 and benefit from the presidential election? It's a little $3 stock out there. They're going to benefit massively from this. And the company's name is Fubo TV. They will benefit massively. That is the sports streaming platform that, you know, if you're into sports, like, you sign up for Fubo. And so the Olympics just being there is going to be very good. Advertising dollars are obviously massive because, you know, obviously viewership's insane for the Olympics, right? And then on top of that, you got, you know, elections coming, presidential election, big money being spent, right? And, you know, a lot of that money is going to go to, obviously, the Metas and the Googles of the world, but a lot of money is also going to go to somebody like a Fubo that, you know, people are watching their TVs, and you need to advertise to very specific people that live in very specific zip codes, very specific neighborhoods and whatnot, right? And so that's going to be ultimately, let's just call it a big benefit for many companies, and Fubo is just one of those little secret companies about
Alphabet has the clear potential to be a leader in the Mag 7.
Nonetheless, Fubo's advertising revenue should beast in 2024. If it doesn't go up substantially in 2024, I'll be extremely disappointed. It should skyrocket in 2024.
Lastly, the last several years, they've been buying back stock. They're actually implementing the Apple and Microsoft strategy. If they continue to do that, I think this is an obvious name that you want to continue to own as a core holding.
Weiss, you own it as well. And Barron's is not naive to the fact that, you know, they suggest the company was caught off guard by Microsoft related to AI, but that it quickly regrouped. And if there wasn't the perception that they were still going to be a player and a major one, the stock wouldn't have done what it has for this year too, which is no slouch either. It's right up there with Microsoft. On a day, by the way, where there's reports and we're talking about OpenAI having a valuation of $100 billion.
Look, very few companies have a product that becomes a habit, that are habit forming. You know, we had cigarettes and that wasn't good for you, but we've got Google, and that's habit forming. Where else do you go? You go to Chrome, you go to Google. They've got a massive installed base when you take a look at their operating system.
Yeah, but the whole point, though, of this the skepticism is that,
but,
yes, where do you go?
Right.
You always did go. The question is, are you going to continue to go?
But here's my point. For all the hoopla about AI that we've seen, it's not really primetime ready. So Microsoft came out earlier.
Chat is.
Chat, but not really. If you take a look at Chat, I mean, it's usable, but it's not where it should be, where you're going to rely on it all the time. Right now, I'd say it's more than intellectual curiosity. So my point is, when you have a habit from a company that's a habit, that is not a startup where they can be put out of business by Microsoft. What it does do, it gives them a lot of runway to catch up, and they can catch it up. And by the way, Meta's not the only company that got more efficient over the last year. So did
ChatGPT, to be fair about this, folks, I think this is important. I talk about this. It is very possible that that's not even very relevant in 5 or 10 years from now. You might say, how is that even possible? They're talking about $100 billion valuation now, blah, blah, blah. Here's the deal, okay? I grew up in the age of the computer coming to life, which was really the 1990s in terms of the internet age and like the masses starting to adopt computers, right? And I remember in school, as kind of like a middle school, even high schooler, I remember when I would go to search something, I would use Yahoo search and also use a service back in those days called Ask Jeeves. That's what it was called. And maybe some of you guys know, Yahoo search and then Ask Jeeves, but those were like the popular ones back when I was a kid, right? It's called middle school, high school. And then what did I start using by the time I got to college and beyond? It was Google search. And I was like, holy smokes, Google search is far, better than these other products. And I just, from college on, it was always Google search. And obviously we know, the business that Google's become. So, you might be experimenting with ChatGPT today and over the next few years, but it's very possible, and it's not a for sure thing, but it's very possible, like, that's not even a relevant service in 5 or 10 years from now. So it's just something to kind of keep in mind. I saw this happen with search. There might be a far exceeding product that's far better than ChatGPT, right? Maybe there's not, or maybe there's going to be. Like, it's just something that's a little food for thought in regards to that, right? Because Yahoo used to have huge market share in the search market, and Ask Jeeves used to be huge, and now almost no one searches with those platforms. It's all Google search.
Very efficient. They got rid of a lot of vanity projects.
Google search got so dominant that now the government's trying to come after them. I mean, for monopolistic powers, like, it's crazy, right?
Decide where they're spending their capital. They are buying back stock. So that's why I own it. To me, you've got regulatory issues, but those same regulatory issues are facing Microsoft, they're facing Apple, they're facing Meta. So
these guys don't care about any of that. They're like, yeah, well, the regulatory issues may be there, but Alphabet might be worth more broken up anyway.
Exactly. And that's always, that remains to be seen, but that's going to keep the bid under the stock. And why, when they lost that lawsuit for last week or the week before about the App Store for gaming, the stock didn't budge. I was kind of surprised at that. I thought there'd be a short-term opportunity to buy more, but I never got it.
Yeah. Jim Lebenthal, you own this too.
It's the time of year you're in, though, Steve Weiss, in all due respect. I mean, we're in that very bullish time of year. No one's looking at anything bad news right now. People will start looking at bad news again in Q1, but right now everybody's just focused on up until end of the year.
It's actually my biggest tech holding, Scott. And apropos of our earlier discussion, I think this is a stock you can buy right now. That's my opinion, based on also an opinion that the market has held this stock back still on the belief that Microsoft is going to eat Alphabet's lunch. I think that's kind of Brad Gerstner's position. I think that's a mistake for the reasons that Steve was just laying out there. And, as Joe was pointing out, unless things really fall off a cliff, the advertising business is going to be good. The web services are going to be good. This
video is not synced to his audio at all.
Maybe 70% that of Microsoft. I think that's a bargain. I don't think it should be at a discount to Microsoft.
Bryn, you don't like it. Why?
Well, I mean, not that I don't like it. We all use it, but I think Joe did a wonderful job.
Right. You own a lot of these. You own a lot of tech, but you don't own this one.
Yeah, exactly. And so I think Joe did a great job on the thesis. So my question is, well, why is it still at a 20 multiple? And when I look at it and take a step back, the two big things is 90% of the revenues are ads. 9% of the revenues are Google Cloud, and it's barely profitable, but it's 25% of the employees. And Steve, I agree, they cut back on a few things, maybe like massages every week. But to me, when I look at these companies that are executing, when I look at NVIDIA, when I look at even Apple, when I look at Microsoft, Meta,
Apple?
you know what you have? You have visionaries, and Satya is not a founder, right? Satya was the third.
Wait a minute. In all due respect, ma'am, the visionaries are gone from Apple nowadays, okay? When Steve Jobs passed away, that was one of the visionaries, and the second visionary was Johnny Ive, and Johnny Ive left Apple, what was that, 3 years ago, 5 years ago, something like that? So let's be very clear, Apple no longer has a visionary at that company. So let's slow down on all that. That's everything Apple's got, Steve Jobs and Johnny Ive.
One in, past Bill Gates. You have a visionaries that are executing, and to me, okay, I don't own the stock, but I follow it, I read the report, it seems like they just don't have that come together where we are going to do one thing or two things very well. And it seems that to me, the whole thing about OpenAI, I mean, they bought DeepMind forever ago. And so to say that they were flat-footed makes no sense. To me, they're trying to be like a fast follower now and trying to catch up, because I don't think they have that leadership from the top that allows them to actually have strong multiple expansion. And I think that leadership is one of the reasons it still has a 20 PE.
Yeah, let me speak about Google stock for a moment here. and just kind of give my opinion. So my opinion on Google stock is I think it's always an ownable stock, right? But just because it's ownable stock doesn't mean you have to own it, right? Kind of like an Apple, right? Apple's technically always an ownable stock. Doesn't mean you have to own it. Doesn't mean it's necessarily a great buy. And that's kind of the way I view Google. Obviously YouTube's a giant. You're watching this on YouTube right now. We know that, right? We know Google search is a giant. We know those platforms are going to continue to be relevant for at least the next few years. 10 years out is hard to see. But for the next few years, everything's fine there. And so always great balance sheet at Google, fair valuation. It's always an ownable stock, right? But once again, just because it's ownable, it doesn't mean you have to own it.